Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be looking at some of ORAT's historical volatility indicators and how they can be used to help us find a trade for this week. Matt, do you want to share a screen and get us started by going over our trades from the last week?
Yes, a little better than the week before, where we had a loser and one winner. Now in the last show, we were talking about the differences between a short put spread, and we sold this for 233, the August 16th, 541, 501, and sold for 233. Now it's 145, so it's a pretty good winner. And then we also did this trade. We sold just the plain 542 and a halves. And we sold that for 210 and it's 108. So they're both performing well. I would have to say now, and from a percentage standpoint, the put itself is doing better, and that's understandable since there's no long component. But both of those are doing well, Tyler.
All right, that's awesome.
And then we have a couple of dangling trades that are actually doing pretty well. We had a long strangle from the long strangle, short strangle that we did before, and XSP. That's up. We're up $86 total on that. That was part of the one that we were down on, so that's nice. We had West, and we're up on West, $75. We're down 45 on TRP. Those are ones where we just bought naked calls and puts. SMH, we're at break even right now. We're up $2 as we speak on that iron butterfly that's still going, and that's it.
Okay, great. Thanks, Matt. Yeah. So this week, we're going to be looking at our volatility indicators. ORATS has hundreds of proprietary indicators that we can use in the stock scanner and other places in the dashboard to help us find trades. So today, Matt, you're going to be showing us how to use the one-day historical volatility and how we can look at that in comparison to some other indicators that we have.
Yeah, it's one of my favorite ones. So the history of this, and one-day historical volatility, what it sounds like to me is like, okay, so that might have something to do with zero DTE. Zero DTE is trading that one day, so it's going to be interesting, I think, for zero DTE traders to take a look at the historical one day, because you could see it's very difficult to calculate a historical one-day volatility. Close to close needs at least 3 days in order to get a close to close volatility. So you can't use that. That's the typical calculation. And the lowest granularity I've seen on close to close is maybe 5 days people look at. But and there's a story behind this, Tyler. I don't know if you've heard this one before, but when I first started market making, I was noticing I was trading the stock called Nextel, and it was moving a lot intraday. Like, so we were owning. I like to own volatility because I was backing myself, and I'd rather be long volatility than short volatility, and then trade around it. So if you're long volatility, you have to buy and sell stock and make more profit than the theta of your position. For a market maker, that makes a lot more sense to market makers than maybe individual traders. But that's what we did. And I was noticing that the implied volatility was 50 and the historical volatility was around 50. So it should have been that I was just breaking even, but we were making money owning volatility. And so I'm wondering if it picks up the intraday scalps, because there's some big intraday scalps that we would do on various days. And then we noticed in other stocks, it was the opposite. Like an IBM was the opposite, where it would just kind of go one way throughout the day. And on close to close, it would be, the same as you were trading, but you would lose money just because it was a one-way move. You wouldn't get that intraday scalp, we'd call it, or a head, like a profit from buying and selling the stock. Does that make sense so far?
Yeah, that's interesting.
So I was thinking, how could we verify this? How could we say what's going on when we're down on the floor, and kind of compare that to the profits that we were getting? So what we came up with was this system where we would download every tick data, and we would simulate trading. And it was hard because the tick data sometimes was a little messy and you'd have to clean it. But we got to a point where the tick data was our simulated hedging. So if you're long gamma, we gave ourselves 1,000 gamma. If it went up $1, that means that you're going to be 1,000 deltas long, and you would have made $500. That you make the average. You make the average delta times the move in the stock. So you made $500 there. If you sold it and then went back down, you would make 500 up, 500 down. So we came up with hedging techniques, and we would set different hedging iterations. So maybe one would be 50 cents, $1, $2, a quarter of a standard deviation up to 3 standard deviations. So we measured all those. And then we found a way to convert that profit into a volatility. And it was kind of a complex calculation, but it's probably a little bit too much to go to here. But so we had this whole calculation going, and I was backing traders based on these calculations, and then we make forecasts of volatility and whatnot. And it would help us figure out if we should let a stock run a little bit or scalp it more during the day, as we called it. So that volatility was often different. And as a matter of fact, for Nextel, it came out like 54, 55 was the real volatility that was trading. And that made sense to me because I knew I was making money more than a 50 volatility, for example. So, we continued this, and it was very expensive to get the tick data. And then we figured out we can modify this one open, high, low, close calculation called Parkinson. We can modify it, and there's some inputs to that. It's not just a standard Parkinson. We could modify it to equate to our tick data that was very expensive to calculate. The Parkinson was not expensive to calculate. And so we figured out how to put the inputs so that we thought they were correct. So that's what we have now at ORATS. We have a modified Parkinson that we've modified and trained to our hedging techniques. Did I ever tell you that story, Todd?
Not in that detail. I think I've heard little bits of it here and there, but very interesting.
Yeah, so it's cool. So anyway, so the offshoot is our the ORATS historical volatilities we think are more accurate than the close to close, and we've shown that in testing. And the other offshoot is that we get to see a one-day historical volatility. So I'm looking at SPY right now, and the graph that we have on the bottom is, I guess this is our one-day historical volatility, and you could tell lately it's come up quite a bit. I mean, it got down to 2.86. So, and I've been trading some zero DTE. I have this safe strangle strategy or safer strangle strategy. So I've been experiencing all these, and this is the experience I have in the last couple of days. The one-day volatility was higher than like a normal implied is about 10 right now. So it's I've been doing okay because the strategy is pretty good, but I didn't make any money, and this is why, because of the one-day volatility has been quite high the last couple of days. So that's kind of verification, and it's something that I think that that traders should look at. Now, you might look at this and say, well, I don't see anything in here. Well, what we've noticed is when it starts to get volatile, it continues to be volatile. When it starts to come down, it continues to come down. That's just kind of an overall type thing. You can see the blue is the implied volatility here, but this is the 30-day implied and 30-day historical volatility up here. So it's low, but it's coming up now, and you can tell that it's coming up about it started coming up the same time as the one day. So I would scale back the safer strangle strategy, just based on what I'm seeing now with a lot of the movement in the underlying market. So does that make sense so far?
It does. And I think a lot of it does kind of look like there's not much of a pattern there, but I think what could be interesting is comparing this indicator to some of our other indicators and then deriving some value off of that.
Yeah, right. Like the ratios and moving averages of this.
Yeah.
Yeah.
Exactly.
I agree. But I think that the really cool thing is the ability to see what the actual one day was, and so like how was it? And so I am right. It was not a very good day for the short strangle, and neither was yet the day before. So anyway, I think those are really, and it was pretty whippy too. It went up, down, and then it ended up. It was up like I think Friday or Thursday or Friday was up almost 1% and down almost 1%. So that's why the historical volatility for one day is so high compared to where maybe close to close would be.
Yeah, what could be really interesting is to look at that one-day historical volatility in the signal builder, where you can see a more intraday view of it, and then you could also kind of merge that with the trade history tab to see a intraday movement of your trade, and then kind of look at those together and say, yeah, my trade started performing poorly at 11 a.m. And then if you look at 11 a.m. in the signal builder, you can see the one-day historical volatility start to change. That could be interesting to see.
That is cool. The one thing that we don't calculate intraday volatility intraday. We calculate it at the end of the day. But okay. I see what you're saying. And that would be neat to look at. So anyway, here's that. Speaking of looking at the trade history, here's the trade history. This is through the last week, and so so right now the put is $1, but it got up to, or it was down to 70 cents. It was up to $1, but it was up to $1.88. So I mean, this is that kind of what you're talking about during the day, what these options were looking like on those highly volatile days, Tyler. I mean, you can see this is that day. So way up, way down on the 11th, and 12th. That's where you got all that volatility that close to close might not capture.
Interesting. So. I mean, we can see how this indicator, changes, and it's a really impactful indicator. How can we use it to find trades? Like, are there strategies or stocks that you can look for with this indicator relatively high or low?
Yeah. So, I mean, I think there's two ways that I use it. One is to I'm avoid taking excess risk. I still have my strategy on, but I'm going to wait for the market to cool down a bit. So that's one way to use it. The other way, like you said, you could search for stocks using the stock scanner. And so I've contrived a ORATS HV one-day high buy ball. So what that means is let's find stocks that are moving a lot, and we'll look to buy some vol here. So it's ORATS HV one day divided by the 20 days. One way to find it. Another way to find it is then to find out, is our forecast higher than the or the forecast divided by the HV, is that lower? Do I want that? I don't think so, because I want to find the opposite. So I want to find where our forecast is higher. Let's go 10% higher, because we want to find things where the stock is starting to move and where our forecast is higher. So the stock's kind of waking up, let's just say.
That's a good way to put it. Yeah, waking up. And then we're going to try to get in early when that volatility is rising, and then hopefully profit off of a future rise in volatility.
Right. And another thing that we want to find is, like, when I put this here, I'll just take this out. So the weeks to next earnings, that really didn't bother these, but so when I use if I didn't have an earnings, so what you want to do is you don't want the earnings just to have been announced, because that would have been a big move and the volatility would be low right now. So what you want to do is, since you want the weeks to next earnings, so if I just put display only, so we'll want to find, like, if it's 13 weeks or 12 weeks, that's a typical cycle in earnings. So you want it, like, I want it to be last week to next earnings to be like less than 10 or something. And that will take out all of the stocks that have had earnings just recently. So now since we've made those changes, I'm going to update, save the scan. It's easy as that to overwrite that. So this is interesting, Tyler. There's SPY. SPY saying, hey, listen, the 1 day is a lot bigger than it's been.
Yeah.
You know, we should add another one with the actual implied volatility. So let's add that. Let's add the ratio of the 1 day, ORHV1, divided by the ORIV, or I guess it's IV 30 day earnings. And let's just take a look at what those look like. So that ratio, the ORATS, because you want this, what do you want this, high or low? I'll give you a test, Tyler, to see if you're paying attention and see if the people out there are paying attention. Do you want the IV 1 day to be higher or lower than the implied volatility out there? We're looking for buys.
I think you want it to be higher.
Yeah. So we're looking for buys. So we want this to be higher. ARC is 9% higher. That's okay. Here's one that's lower. So we don't want that. So we'll set this at maybe 10%. Or since I'm lazy, I always go 1.11. All right. So we're down to 12 stocks. So that's pretty cool, including the SPY. So this is saying let's buy some SPY vol, and same with Intel.
This might be a silly question, Matt, but why are we looking at specifically the 1 day historical volatility and not the 5 day or the 10 day? Because oftentimes you can use that indicator and compare it to the implied volatility.
Right. So what we're trying to do is we're trying to say a lot of those other calculations don't weight the 1 day as much as we are. So we think that we have a competitive advantage with the 1 day. So we think things are starting to heat up, and we'll know it first in greater detail because we have a 1 day volatility.
Okay, so we're going to see it heating up before other people are.
We're going to see a big move, like whippy move, and you'll find some things that, So now we could even try to isolate that even more by looking for things like what's the lowest. So we want to see a low close to close, right? So close.
Well, yeah, out of this basket of stocks that we've already filtered down, how many of these are kind of flying under the radar with a low close to close volatility? Is that what you're trying to look at?
Right. So we want to find a low close to close ratio. So let's take a look at that. So here's where is that? Oh, here it is. So it's looking good because look at the 5 day close to close divided by ORATS close to close. We want that to be low, right? We want close to close to be low.
Right.
So let's find, so the max, I don't know what to say, 9.95. So now we're down to 7 stocks. We lost SPY, but that's okay. Maybe 95 is a little aggressive. Screw it. So these are stocks, Baidu, that might be flying under the radar. So here's so that's coming down. So this might be an interesting one for buying volatility.
Yeah, that's interesting.
Yeah.
Do you want to look at all these? I think it was like 6 stocks were left in our scan.
Yeah. So you're right. Let's do it that way. Let's save the scan. And I think what you're saying is let's go over to the option scanner.
Yeah.
And okay, so now the question is, how do we want to do it? There's a long strangle. Let's clear everything. Let's add the stock scan. Okay, so there are all our stocks. Now, what are our strategies? It's something like actually, let's do a custom one. Let's do a reverse iron condor.
Why do you suggest that one?
Well, it's fun to say, and we can. It's not as much risk, and I think it's a decent low risk, high return strategy.
Yeah.
So
Makes sense.
so we're going to be selling the highest strike call, buying that one, and selling that one. So let's add that. So that's and let's make it shorter term, but go out to 33 days. Let's now, I think we're going to, all right.
We got quite a few trades there.
Yeah, well, there's IBM's a lot in there. Let's just make sure that this is what we want. So it's still a credit. So it's not set up right. So we have to manually do the strike width on this, because this is assuming 0.0 for the DTE diff, which we want. But the strike width, now we have the high strike. Let me make sure we have it right. So we're selling a call. That's going to be the high strike. So this one, I think we want this to be, so it'd be like 100 minus 95, so that it would be 2 to 50, and then 2 to 50, and then the puts. I think it's the same thing. So is this right? So we want to be paying for this. So hopefully I could do this right. All right, there it is. So now we're paying for this. We want to be paying for this. So now here's Baidu. So we're buying the 91, selling the 89. We're buying the 96 put. Right, the call. Sorry, let's start over.
The
So
payoff diagram looks pretty good.
What's that?
The payoff diagram looks like where we want our profit to be. Yeah.
Now that looks like a long delta trade. Is that long delta? Yeah. So that's long delta. It's only four long delta, but that seems okay. I don't have a big axe to grind on the delta, so we might want to. We could set a delta range. We could set it like negative 0.03 to 0.03. So then it gets more kind of delta neutral for these.
We have one of the great things about our option scanner is the theoretical values, the distribution percentage, the forecast percentage, and the smoothing percentage.
That's a good point. So I do want to have the forecast up there. Oh, the smoothing, we got to do that too. We got to set a range on the smoothing from negative 3 to positive 3. All right, because we don't want to give away too much edge on the smoothing. And again, the smoothing is, we draw a smooth curve and we don't want that to be too far from the midpoint. All right, so now we're
that forecast edge, if you look at it, all those are positive, and that's probably because we look at things like the one-day historical volatility in that calculation, so it's already going to be high.
Right, and we've set that to rank it. So there are 135 trades. We're only seeing 50 of them, and we're ranking only the top 10.
Gotcha.
All right, this 12 days. How far away from the money are we? So we're 93. Is that enough days? Let's see. $1.93. Let's take a look at the old trade builder. So it's all right in there. I think that looks pretty good, Tyler. It just has to end up somewhere outside of that.
Yeah, can you show the break evens on that and maybe zoom in?
Yeah, so the break evens are 90.1 and 98.1. So, so down here and kind of up here.
Gotcha. Okay, cool. Yeah, I mean, it would be really cool if, you could back test these, right? Like if you could say, well, because you asked the question, is this enough days to expiration, right? And we don't really know the answer to that. right? I think, that would be something really interesting that you could back test, different, days to expiration for this exact strategy.
Well, I think you can back test that, but one of the things that we're working on is, back testing from scanner to the strategy and picking out the best ones, and then trading all of these things is all going to be part of the back test. But I think we go ahead 192 and do this trade. 192 they have it worth, so we'll pay 195. I think we could get filled there. We'll force that, and let's see if that goes through. All right, so that works.
Do you want to look at setting up a profit target for this? Maybe getting out at a specific point in case it, falls back and retreats to its levels, or?
Sure. That's a good point. So the most you can make on this, $100, 109 down there, and 209 here. So you could set. Trying to think how I'd set this. But yeah, let's go. We had this restore last, but let's set a trade alert. So that could go 3. This could go. Why don't we'll set a profit and loss above 50% and see what happens.
Okay.
I'd be fine with that.
And what dollar value is that? So if we're paying 192,
it's like making $1.
Okay. Yeah. And then the max profit we can make on that is, it's not more than it shouldn't be.
Well, you can make $2.
Okay. So we're kind of right where it's going up on that.
Right. So all right, so I think that's a good one. I don't know if we want to get too greedy and do another one, but there's so what I like to do now is when I've filled on Baidu, so I'm going to take that out of the list here, and now I see that it's Ulta, and let's check this out. All right, so Ulta again, 12 days. It's pretty close. It doesn't have to move too much. Let's see how Ulta's been moving. So Ulta moves when it moves. So I think that's something where we could get outside the 395, 407. Looks like it's a short delta. No, it's a long delta because we could make more on the top, but we're closer to the profit on the bottom. So this looks pretty good. You want to do this one too for good times?
Yeah, let's throw that one in there. Yeah.
All right. So it's 379 theoretical value. So we're probably going to have to pay 385, and we'll force it, and we'll review it and send. All right. We got a couple trades on, Tyler. All right. And we've talked about, just to recap a bit, that 1 day historical volatility is an edge to ORATS data and to our tools. So you could use that. And we tried to set it up where we identify stocks that we thought were moving a lot, but also stocks where it might be difficult for our fellow trader competitors to find, but who usually use something akin to close. So in the stocks that we've identified, they all have a good 1 day divided by implied, a 1 day divided by 20 days of movement, and a good forecast divided by the 20 days of movement, but also a low close to close. So those people would still be asleep to this particular strategy. So I think that's a good way to start to utilize the indicators that ORATS has in your favor. And I could go in and copy this for you, right, Tyler? I could copy this and send it to you. And you could
Um,
we could put it in our templates.
Yeah, so after the show, we'll upload this to our templates so that you guys can use the scan as well.
Cool. And also, I should also mention we took out earnings because you don't want to get these false positives as well.
Great. All right, thank you, Matt. I thought that was a great show. If you guys have any questions about our indicators or the dashboard tools, anything of that sort, you can always ask us on our community tab in the dashboard if you're a member. And then you can ask us on our YouTube or email us. We have lots of ways you guys can reach out. So thank you, Tradier, and thank you, Matt. And we'll see you guys again next week.
Thanks, Doug.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.